I talked about two methods of sizing our market, and I'll explain the first one in more detail now. This is called top-down market size, or here I call it top-down revenue projection, because estimating our top-down market size also enables us to get an estimate of our year one revenue, which is very valuable for our budding business plan. So to do a top-down market size, we begin with estimating the size of the total addressable market. I always like to estimate the size of the total addressable market in dollars, not customers, because dollars are comparable across all markets. If we estimate the market size in terms of customers, it's very difficult to compare markets. Example, first market has 10 customers and second market has 1 million customers, which is a bigger market. We don't really know until we know how much each customer is going to spend. If the 10 customers are going to spend $1 billion each and the 1 million customers are going to spend $1 each, then the 10 customer market is bigger. So we need to start with the total addressable market in dollars. Then we estimate a target within that addressable market as a percentage of total addressable market. Then we choose our entry segment and estimate the size of the entry segment as a percentage of the target segment. And then we estimate our market share in year one as a percentage of the target entry segment. So example, let's say the total addressable market is $500 million. The target market is 50% of that, which is $250 million. The target segment is 10% of the target market, which is $25 million. And our initial market share of that market is going to be, of that target segment is going to be 1%. Then our revenue in year one is going to be $250,000. After we have done the top-down market forecast, then we do bottom-up market forecast. So the bottom-up market forecast requires us to understand our revenue model. So in this case, we have a revenue model with 3 main revenue streams. We can forecast how much of each of the revenue streams do we expect to sell in the first year, how many units, and what will be the price per unit for each of the units that we're going to sell. Then we can add up all those numbers and come to our total bottom-up revenue forecast in year one. Once we have arrived at that number, now we will have a total revenue forecast for year one that's calculated 2 ways, using our bottom-up revenue forecast based on our business model and our top-down revenue forecast based on our total addressable market, and then scaled down based on our target segment. You can think about the top-down model is an estimate of the demand in this market for our product, and the bottom-up model is an estimate of our ability to supply that demand. If our assumptions are consistent in both models, then our year one revenue forecast should be the same. That will ordinarily not be the case the first time we run this analysis. This is a feature of this method, not a bug, because it's the beginning of our iteration process. So we make our assumptions about the top-down market size and about the bottom-up market size. And after we have made the initial assumptions, we look at the difference. And one will be higher and one will be lower. Then we'll decide which of these estimates is more realistic based on what I call reality check or reality testing of our estimate against what we know about the real world. And then we'll choose that forecast to anchor on. And then we'll go back to the other forecast method, identify what were the weakest assumptions that we made in our first iteration, adjust those assumptions, rerun the model, and see if our results are converging. Then we continue this process of iteration until our top-down revenue forecast and our bottom-up revenue forecast are giving us the exact same result. in which case we will have the year one revenue forecast and an estimate of our market size that is supported by two independent methods of estimation, which gives us a fairly high degree of confidence that this is a reasonable estimate of the market size for our startup.